turn our attention here stateside. Big news this morning. Inflation data released in February, 7.9%, the highest it's been in 40 years. Republicans for months have been saying that the rise in inflation, this record rise in inflation, is a result of too much stimulus. That the American Rescue Plan is part of that, added too much stimulus to the economy. What do you make of that argument? Were they right?
Well, I think the American Rescue Plan, and this week we're celebrating the 1-year anniversary of it, did a great deal to strengthen the American economy. Just look at the job market. We have one of the strongest job markets that we have seen in this country in a very long time. Americans are easily able to get jobs and feel confident in their ability to move. We're seeing the quit rate reach all-time highs as Americans feel confident about their ability to get better jobs, to move across jobs, to improve their pay and working conditions. It's remarkable that the unemployment rate has fallen more this year than in any year in American history. When you consider that we had a double-digit unemployment after the pandemic struck, and in a very short time, we're back to normal levels of unemployment, low levels of unemployment. It took almost a decade to achieve that after the financial crisis in 2008. And we really protected most Americans from severe financial crisis consequences of the pandemic, so that they're by and large in good financial shape, poised to spend enough to continue propelling solid growth in the US economy. And we're seeing that in the labor market. The pandemic played a big role in inflation. The drop in unemployment, the strengthening in the labor market, without the pandemic, it might have put mild upward pressure on inflation, but much of the inflation pressure we're seeing, which is of tremendous concern, it hits Americans hard. It makes them worry about basic pocketbook issues. It is a great concern to us. But I think a lot of it, and we're seeing this all around the world, it really stems from shifts that were due to the pandemic. We saw a huge shift away from services toward goods in the United States and much of the global economy. And we quickly encountered bottlenecks, supply constraints that have made it difficult, even though goods production is increased in the United States and globally, moving those goods, transportation costs. We have a shortage of semiconductors that's curtailed auto production in the United States. Higher car prices, new and used cars account for a third of inflation. I think it's supply chain issues caused by the pandemic and the shift in spending that's really boosting inflation here and around the world.